Perspective on Florida Gateway College Television is sponsored by Nutrien. Nutrien, feeding the future.
Everyone, and welcome to Perspective. This is a public affairs presentation of Florida Gateway College. My name is Mike McKee, and my guest on today's show is Chani Morris. She is a loan originator, mortgage loan originator at Drummond Community Bank, and we're going to talk about how to get a loan and what the steps you need to take if you're even a first-time home buyer, what that's like. We'll do that when we come back. Don't go away.
When I was your age, I was just like you, fascinated by stars. But now I get to search for life in the universe. And who knows, maybe life is looking for us too.
So we're like aliens to them?
Yeah. Does anyone want to be a scientist now?
I do.
Awesome. We need more girls in STEM.
Maybe we can find aliens.
Back to Perspective on Florida Gateway College Television, and also welcome to the listeners on WQHL Radio and WCJX Radio. We appreciate you tuning into the program. If you ever wondered what it's like or what does it take to get a loan for a new home or even an existing home, we're going to tell you all about it. Chani Morris is a mortgage loan originator, a mortgage loan officer at Drummond Community Bank. Welcome to the program.
Thanks, Mike. It's good to be here.
Now, Chani was doing some, I guess you were doing some classes for some of our students to, don't be afraid of a mortgage, but if you're going to do, this is the do's, these are the don'ts, and things like that. So we thought, well, let's get your expertise on television and let more folks see and hear what you have to say. First of all, you've rented, you threw money away by renting a house or renting an apartment. You finally decide, I'm ready to take the plunge. What do I need to do? What's the first step in buying a new home?
So the first step really is to go to a loan officer, somebody that you eventually gain some trust with. You want to feel comfortable with the person that you're talking to because you're going to tell them all about your finances. So go to them, tell them about your situation. Be super honest with them. Let them know what's going on in your life. Let them know what your future looks like to you, what you want to be, where you want to be in 5 years, 10 years. Those things are really important because buying a house is way different than renting. You're going to have this place until you decide to sell it. So knowing, what you need to do to prepare is the number one thing that I tell people. Go see a loan officer before you're ready to actually go out shopping for a house because they'll help you figure out how to prepare to actually make the application, get approved for a loan, and then purchase your first home, second home, investment property, whatever it is.
But so this is the largest purchase that you'll do in your life. Of course, if you buy several, then it'll be the next largest purchase, the next largest purchase. But what do you need to do? I mean, obviously, there's no stupid question. If you're, and I guess that's where the loan officer comes in and says, look, don't ask me anything. Because, if you don't know, it's hard for people that don't know to ask questions because you feel like you need to know everything.
Yeah.
What are some of the first things you need to do?
So it starts off with a mortgage application. It's probably 15 to 30 minutes depending on who you sit with. I'm a talker, so it takes us, if you sit down with me in the office, it takes us about 30 minutes to go through the mortgage application. That really allows the loan officer that you're working with to see what your situation is, and they're able to then help you to start strategizing. Maybe this loan program would be a good one to get an estimate for you on, or we could compare these 3 different loan programs because you might fit into all 3 of these, and one might be a better option for you now and long term compared to the others. So that's your first step, is the mortgage application.
So what type of questions are on there, just so you're kind of prepared when you go in? What are you going to be asking them?
Social security number we do have to pull credit whenever you're ready to start moving along.
When you say credit, now, is
credit
that your
reports.
Credit report.
Yes. So
What's
we
involved in
pull
that?
we pull it directly from the TransUnion, Experian, and Equifax. So those are the three main credit bureaus that we pull from, and it tells us. I mean, it basically lays out all of your past credit history. Tells us what your credit scores are, and I tell people credit scores are kind of the key that unlocks the door to getting yourself a mortgage, but what's actually on your report, how much you're spending each month on your monthly payments for credit obligations or debt obligations, I should say, that's really the important part of figuring out whether you've got the ability to repay a loan. So that's the credit report section of it.
Now, what types of things are going to be on a credit, like your car payment?
Car payment.
Your like how many credit cards you have. And
any derogatory credit as well will show
what is
up.
that? What is derogatory?
Derogatory are negative things that have happened in the past. So possibly if you've had a repossession, if you've had a foreclosure, bankruptcy, both Chapter 7 and 13 will show up, and they'll show up for several years. Collections, unfortunately, people do seem to pay off their collections, but for some reason they'll still show up several years down the road because maybe the company didn't realize that you paid it, and then they sold that collection to another company, and now that company is expecting payment. So it's kind of a vicious cycle.
So it's really good. I mean, this is good information even prior to going in to see what your credit report looks like. Because if you've got some problems, there may even be some mistakes on there.
Oh yeah, and I tell people, like, if you're ready to get going, you really want to go buy your first house, or maybe refinance a home that you've got, but your credit is suffering, start paying attention to your credit every single week. Get on Credit Karma. It's not always super accurate as far as your actual scores go, but it will tell you if your score is going down or if your score is going up, and you can usually take that with a lot of accuracy. And then if you need to improve your credit and you don't know how to do that, there are so many resources online. This is not a direct endorsement. I just use this company. It's called mycreditguy.com. They've got a blog. The blog has so much good information as far as how you can improve your credit score. If you're starting from scratch, you don't have credit, and then you're going up from there, or if you've got you've kind of hit rock bottom with your credit and you need to improve it.
Is there a time frame? Like, say I made some bad mistakes when I was 20 years old, and I got sent to a collection agency because I wasn't making my payments. What's the time frame on forgiveness of that bad decision?
It's really different for everyone depending on how severe the situation is. From what I've seen, if someone's very interested in improving their credit and they get working on it, and they try hard, they pay off a lot of debts, or they go see a credit repair specialist. You've got to be careful with those people. Some of them are more honest and trustworthy than others. But if they're doing the work, usually just a couple of months, you'll start to really see the scores skyrocketing up, which is awesome. It doesn't take too long. It's not rocket science. There's a lot to learn about credit, but once you know what you need to do to improve your scores, it takes just a matter of months normally to start seeing an improvement. Now, as far as getting it to where it needs to be, usually in the 600s or better for purchasing a home, that depends on where you're at and how far it is to get to where you're going.
So once you fill out this loan application and all the information is on there, does that determine what you can afford versus that pie in the sky, the fancy schmancy house that everybody wants to have?
Yes, it does. A lot of loan officers will just go at it from the standpoint of, hey, based on your debts, based on your income, you can afford X number of dollars for a house. I like to flip the script a little bit on my borrowers. I ask them to do a budget, like, whether you actually do a budget all the time or if you just do it for me, just to tell me what you're comfortable spending on a home. I don't want to put anyone in a situation where I tell them they're approved for or pre-qualified or whatever for a $300,000 house, but they can't afford that monthly payment because they've got other obligations that maybe didn't show up on their credit report, and they're not telling me about those maybe health insurance bills or childcare bills. I don't want to put them into a bad situation. So I ask them, what's your comfort level? Where are you comfortable spending per month for a mortgage loan? And go about it that way.
And again, you mentioned that unforeseen stuff that doesn't show up on a credit, like perhaps a loan from a family member,
right?
Is not going to show up on a credit report because you're just paying mom for whatever or dad for whatever. So you need to be as honest as possible because you don't want someone to get into a loan situation where it's going to be a hindrance to them, to where they can't pay it and they default, and then they go through the repossession or default process.
Yeah, that's very difficult. I mean, having a late payment on a credit card or a car loan is extremely different as compared to having a late payment on a mortgage. It hurts your credit a lot more. A lot of people look at that as being like the worst of the worst if you've got a late payment on a mortgage or, God forbid, a foreclosure. Now, you can overcome that, and it only takes a couple of years to do so. But
well, the key, Chani, I think, is that try to make your payments. Don't use a credit card like it's like you're the Mr. Howell and Mrs. Howell on Gilligan's Island, and where you're spending all this money. That's a terrible analogy, but anyway, we're going to take our first break, and we're going to talk about down payments and what down payments are best for you depending on the house you're looking at. We'll do that when we come back. You're watching Perspective on FGC TV.
I don't remember how it started.
Go to that.
Our back and forth. It always came back.
Dad!
You probably don't remember what you told me,
That was perfect.
but I heard every word.
I'm with Chani Morris, a loan originator, mortgage loan originator at Drummond Community Bank here in Lake City. Chani, again, it's a big step. You don't have to be married to take this big step. If you want to buy a piece of property or an apartment or a duplex, or you can do that if you're not married.
absolutely, you can do it with a spouse or a partner or a friend. You don't have to be married. Obviously, if a couple comes to me and they're brand new in their relationship and everything, I'm not a counselor. I'll talk to them. I'll let them know the investment that they're about to make. All of the steps, the mortgage process. I'll educate them, but ultimately. Yeah, absolutely. You can do it if you're not married.
So my next question is, we talked about down payments before we took the break. Are down payments the same, or do you have to find a piece of property or some real estate to know what you're going to have to put down on it by what it costs?
Right. So down payments are usually, you'll find them as a percentage based on the type of loan that you're getting. There's 4 main types of loans: conventional, FHA, USDA, and VA. Now there are other loans outside of those programs, but those are the 4 main types that most people end up going with. Each of those loan programs has their own specific minimum down payment, and those down payments are in percentages. So if you go find a property for $50,000 or a home over here for $100,000, minimum down payment for an FHA loan, which a lot of people are very familiar with, it's a good first-time home buyers loan program, that minimum is 3.5%. So 3.5% times $100,000, $3,500 would be your down payment for that house, which down payment really just means you're going to own exactly that much of the house whenever you move in. And then the lender is going to lend you the money for the rest of it.
And you're going to be paying the lender.
Yes.
And the lender will have already paid the homeowner who sold the house to you.
Correct. So the lender fronts the money, gives the money to the home seller, and then you pay the lender back.
I know there's probably not a set number, but would you say $20,000 in the bank to possibly make a down payment? Would that be a good? I mean, obviously the more down payment you put, the less your loan is going to be, and it could reduce the amount of payments each month.
Absolutely. I mean, the more that you put down, the less that your mortgage payments are going to be. Probably the lower your interest rate will be, which is also going to help to decrease your monthly payment. But overall, if everyone that walked into my office had $20,000, I would probably fall off the couch right now. That's just not the case anymore. Most people don't have all of that money saved up. Now, it's not that they don't want to. It's just a lot tougher for people with everything that we pay for these days to save that kind of money. So regularly I see people come in with $5,000 to $10,000, and that is substantial for a down payment in North Florida most of the time for one of the smaller, minimum down payments, and then they can help contribute towards their closing costs as well.
Let me ask you about pre-qualifying. Would that be what they're doing with you when they come in and fill out the loan application to pre-qualify?
Yes. So a mortgage application allows me to pull credit, talk to you about your income, figure out what your debts are. Once I get all of the information on the loan application, I determine if you're able to likely get a loan. So that's called the pre-qualification. Once you get a pre-qualification, green light, you'll get a letter that says that you're pre-qualified for the loan amount that you're looking at that we've discussed, and you'll take that letter to a real estate agent and you can say, okay, I'm ready to go shopping. I know what it means to have a mortgage this size. I'm ready to make those payments, and this is the direction that I want to go. These are the types of houses that I want, and that's how it goes.
I guess you could equate it to grocery shopping. You have a budget that you're going to have for groceries.
Right.
You're going to know, and again, we're not going to spend $100,000 on groceries, but say you do want to shop, you've got your finances are in order. You want to know exactly what's in your price range, and that's where real estate agents come in.
Right. So if they come to me and they say, Chani, I'm comfortable with $1,000 a month monthly payment, I'll say, okay, that equates to X number of dollars for a loan. So you've got $10,000 that you want to put down on this house, so you can get this loan amount, and then that $10,000 will go towards your down payment and your closing costs, and then the agent would get the loan pre-qualification letter specifically for the amount that they're going to go shopping for.
Now, should you be in a hurry? Again, and this may be just my take on it, but a lot of people think, well, I get qualified, let's get that house now.
Yeah.
Is it sometimes better to kind of wait things out and see where you're going to get a deal? Maybe wait. If an owner says, I want this, you make them an offer and they don't want to budge on it, and so you say, all right, well, we'll.
Yeah. I have this feeling that everything does happen for a reason, especially in this industry, because I have dealt with many buyers that have gone out, gone shopping, gone under contract on a house, and just something told them kind of from the get-go, and they would let me know, like, this feels a little bit weird, or they won't fix this, but we're going to keep trying. And I always tell people, if it doesn't feel right, there are going to be other houses. There's another bus coming behind you, okay? So it's fine. It's going to be fine. But it depends on the situation. If somebody's in a bad situation, they're able to go out and get out of that situation, buy themselves a home, then yeah, maybe you're in a little bit more of a rush to find a place. Especially though, if sellers are going to consider contributing money towards your closing costs, which for some loan programs, they are able to do that. They're able to help the buyers out with some of the closing costs. If a buyer finds that they absolutely have to have help with the closing costs, otherwise they won't be able to close on the loan, they don't have enough money for the down payment and the closing costs, and they come across a seller who's just, no, can't do it, I don't have the money to pay your closing costs for you. In that case, I would normally advise the buyers, listen, I know you love the house, this might not be the right time, or it might not be the right house. So it really is, you know, a lot of what I do is kind of coaching and advising, much less than just, you know, giving quotes. I don't usually just give quotes out to people. I will also try to, you know, help them in some way outside of quoting.
Well, and again, what are closing costs? What's involved in the closing cost? What are we
Right.
paying for? I mean, obviously, when you close, both parties get in a room and you sign paperwork and you sign deeds and things like that.
Oh, yeah. So taxes, title fees, survey fees, appraisal, my goodness, prepaid taxes and insurance, escrow, cushions. There's a lot that goes into closing costs. And for the most part, when you go to purchase a home and you're getting quotes from different loan officers, you will see that most of the fees on those estimates that they're giving you are going to be relatively similar because they're all required. The loan officers and the companies don't have any way to really modify those at all. So closing costs are just there to pay the third parties for the service that they provide in order for you to close on the house.
Well, and you have to do a title search, and I think a lot of people don't realize that a title company looks at to make sure there are no liens against the property
Right.
that are unexpected,
Yeah.
which would kind of put you in a situation where you're now buying a house and you're having to pay a third party because they put a lien on the house, and so it's important that you have that assurance. I think it's called title insurance.
It is. Title insurance, it's wonderful to have assurance. And the reason that we do, you know, most of the things that are involved in the closing costs are to help the buyers. It really is. It's to protect the buyers, to help the buyers. I love escrow accounts a lot of the times because a lot of people do struggle with saving money throughout the year. And when we do save money, we want to spend it on the people that we love and, you know, sometimes on ourselves, take ourselves on trips. We don't want to go, oh crap, my taxes and insurance are both due this month and it's going to be $2,500 and now I don't have money for Christmas anymore. Escrow accounts are basically forced savings accounts, which are wonderful. Every single month that you make that one monthly payment for your mortgage, a little bit of money goes into a savings account called an escrow account so that the lender will actually go and pay your taxes and insurance whenever they come due each year, which is great. I mean, that's something that a lot of people will opt to do, and a lot of people are also required to do based on whatever loan program they go with.
Well, and again, when you're renting, you don't pay taxes on your rental property.
Right.
But you do pay taxes on your home. You pay it to Ronnie Brannon's office every year, and it is good that some people do it themselves. They set aside a little bit of money each month to make sure that they pay the taxes when they're due.
Yep.
In I believe it's the fall of every year.
November is when it starts. Yeah.
Yeah, truth and millage notice is what they call it, trim. So I go in, fill out the paperwork, we go through the process. How long does it typically take to get that go ahead, that thumbs up from the bank and Chani Morris?
So I wish that it was me that gave the thumbs up. Really, I do the application. I help out as far as, you know, making sure that you understand what documentation you need to bring over to us so that we can underwrite the loan. But the underwriting process, from the time that I receive your contract, you've gone under contract on a house, you've given an escrow deposit to your agent saying, yes, this is the house, I want to buy this. From that point, it takes about 30 days on average for most loan programs. If you're going with the USDA program, which is a 0% minimum down payment program, it is a little bit longer for that one because not only do we underwrite it at the lender that we work with, but we also have to then send the loan file over to USDA. They have to give their stamp of approval. So I say for USDA normally 45 days or less, unless if there's like a government shutdown going on or some, you know, major influx of a lot of new loan applications to USDA. So about 30 days on average.
Okay. Is there something that you should be doing? I know that savings is important. That's a good start to get your down payment together. What do you tell young people about savings? Should they force themselves to save?
I think so. I mean, the sad thing is that as young people, we see, shiny objects, and anybody, not even just young people. We want things immediately, that instant gratification. And it's much harder when we do that regularly to also remember, hey, I need to pay myself first. I need to put some money away for the future, whatever the future is for you, whether it is buying the car of your dreams, the house of your dreams, maybe getting your kids braces, whatever it is. So I always say, just map out what your expenses are each month and figure out how much you're going to bring in from working that month. And then, say, okay, if my expenses are $1,000, I bring in $2,000, I have $1,000 for, money to maybe go out and entertain myself, but also to save. So how much of that can you put into savings? Even if it's just $30 a month. I mean, I see people regularly that are very close as far as their expenses and their income, but they're still able to put some money away each month, and I think that's very important. It also teaches a lot of self-discipline, and it will help you so greatly, not only when you're trying to prepare for buying a house, but also once you become a homeowner. When you're renting, you don't really realize the expense of owning a place because somebody else is going to come in and fix the hot water heater or the AC or whatever it is that is having some problems. But when you're the homeowner, that responsibility falls on you, and it's expensive. And the last thing that I want anybody to do is to go get a $200,000 mortgage and then the garage door break and then they have to go put $3,000 or $5,000 on a credit card to fix their garage door, which happened last year to a customer that I worked with, and that's just sad. I don't want that to happen to anybody.
And it would be a good idea if you are going to go to a bank, talk to a person like Chani, maybe have that account, the savings account at that bank, because it shows good faith that you do banking here, and it would be good to have your loan there as well. I know banks appreciate that. We're going to take a break and tell you how you can get more information from Ms. Morris. We'll do that when we come back. Don't go away.
1 in 3 adults has pre-diabetes. That means it could be you, your favorite brother, your other brother, you, your boss, your boss's boss, you, your barber, your barber's barber.
Nice work.
Thanks.
Or you, your co-pilot, your co-pilot's co-pilot. With early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org.
Welcome back to Perspective on Florida Gateway College Television. My guest has been Chani Morris, a mortgage loan originator at Drummond Community Bank here in Lake City. I guess there are branches all over
The Nature Coast.
the Nature,
a
Cross
lot of the
City.
nature-
So all the places that Florida Gateway College serves is served by Drummond Community Bank. But we appreciate Chani coming in and sharing some knowledge about maybe first-time home buyer, if you're interested in getting a loan, what that all takes. And I believe your services are free to anyone who would like to say, hey, Chani, either tell me yes I can or no I can't, and what should I do? Her information at Drummond Community Bank is right there. drummondbank.com is the website. And I'm sure there's a section in there for loans.
Yeah, they'll just, whenever they go to the main Drummond Bank website, you'll scroll down just a little bit and you'll see apply for a loan. Just click apply for a loan and it'll ask you, do you want a residential loan, like a mortgage loan, or do you want a bank loan? And you would click residential loan, it'll take you to the page where you need to be to find a loan officer.
Right, or they can call you. I mean, hopefully.
You can call me. I love to talk, so
well,
call me anytime.
But we appreciate you taking time to kind of explain this, which can be a scary situation for some people. And I mentioned that you don't have to be married to do a loan together to buy a house. It certainly is a lot less scary when you have a spouse involved that is willing to help share that burden, especially with two incomes. It also makes a difference in that when you go in to pre-qualify, both of those incomes are looked at, and
Yeah.
so
no matter what, no matter the loan officer that you have and the process that they have in place, it's going to be a stressful situation because you're buying a house. You're buying a big purchase price of a house, and that's like one of the biggest expenses of your life. So even if the process is just slam dunk wonderful, it's still going to be a little bit scary. It's good to have somebody to go through that with.
All right, thank you for being on the program. Thank you for
having me.
watching Perspective here on Florida Gateway College Television. Until next time, I'm Mike McKee. See you later.